Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 13th of April. Starting off with the FTSE 100, which is right on that line that I drew from February some time ago. So that's nominally around, we basically an end-of-day close above 78.50 really to clear that, and then open the door to a move towards retesting February resistance, and then back up to the top of that rising trend channel from September. Currently pointing to a rather ambitious target as high as 8,200, and if we push through 78.50 relatively quickly, that could be the target for as soon as the end of next month. So rather upsetting the idea of sell in May. The other point to note this week, which is a positive development, is the way that the 50-day moving average is now rising. It's sort of curling up over the last couple of sessions, with the 50-day rising along with the 200-day line. That's the equivalent of a golden cross, and that should accelerate the price action. Below the 50-day moving average risks a move down to 76.40, which was resistance on the way down and was also support to start this month. But at the moment, we're not really thinking that this market's going to go much below that rising 50-day line. Moving on to the DAX, and yeah, we're still toying with the recent highs. Good performance anyway, a good recovery from that March dip, the Credit Suisse dip that we had. Here the situation is that we're well above the rising 50-day line, so the DAX is sort of a week or two maybe ahead of the FTSE. 50 and 200-day lines rising. We're looking for the top of that rising trend channel from September to 16,500, perhaps as soon as the end of this month, while we remain above the 50-day line at 15,400. RSI just in the 60 zone, so plenty of gas in the tank, i.e. 10 points before we get onto the overbought 70 area. Onto the Dow, where I think people keep trying to call it down, call the US market down, but doing well over the recent past, at least consolidating above the 50-day line. Here the 50-day line still falling, so there is the risk of a test of that around 33,000. The key event we're looking for is a break of that one-year resistance line at 34,000, which obviously scuppered the rally between November and February. End-of-day close above, or a weekly close above 34,000. We could be targeting 36,500 at the top of that channel over the following 1 to 2 months, maybe even as soon as the end of next month, but probably we need to see 34,000 well before the end of this month before we can call this market up to the best levels of the last couple of years. On to Bitcoin, which went over the top, i.e. over 30,000 earlier this week, and it looks like it's consolidating its position quite well. We had that extended bull flag well above old resistance, so the bull flag floor there around 26,700, the old resistance around 25,000, very strong signal, and it worked. Still looking for 32,000 as a minimum. That would be the top of that rising trend channel from June last year, or if you prefer, a broadening triangle from June last year. 32,000 rather, the resistance on the way down, and that's a key level. I think above that we'd sort of say that the technicals are half full, or Bitcoin is half full, whereas at the moment we still feel maybe half empty on the whole experience of the last year or so. On to the stocks, and great announcement today from Ananda. Here we've managed to break our old target, which was around the 0.6 level. It seemed rather ambitious when the shares were around 0.4, but we've done it, and above 0.6 now, looking for as high as that March resistance line projection, 0.95, maybe over the next 1 to 2 months. The shares certainly looking pretty strong at the moment. We had a RSI 50 dip, a bounce rather off the neutral RSI 50 level to power this latest rally. It looks like a V-shaped bull flag breakout, and all we're waiting for now really is for that 200-day line, the grey line there, to start curling up, and that would probably accelerate the price action even more. Lots of people eyeing up Clontarf at the moment, and just quite rightly really. Here we had a bounce off the floor of that rising trend channel, bear trap rebound from below the rising 50-day line. When you dip below a rising 50-day line, it tends to be a buying opportunity, just stopping people out below that feature and then up. Current view is that we could get up to that September resistance line projection 0.24 pence, maybe as soon as the end of this month. You can see the shares rising as I speak. The other plus point at the moment is the way that, or plus points actually, the 200-day line's also rising, and we've just crossed above the neutral RSI 50 level, which adds momentum to the whole setup here. So looking pretty good indeed. The other point to note is the way that this month's support was old November and September resistance, so that is a bullish structure to the whole event. On to Hummingbird, which is edging up again. We're still looking for it to go to the top of that rising trend channel from back in August. That's at 11 pence, so hopefully we'll get that over the next week or two. Next target after that around 15 pence, hopefully by the end of next month, which is the main July 2021 resistance line, and that would be the main trend break if the shares can do that. Obviously they've already broken back above the 200-day line around the 7.5 pence level, so on that basis one could say that we are in bull mode already. On to IOG, where I noticed people on Twitter have been trying to call this up after its recent rather calamitous falls, double gaps down there at the start of the year. But we've seen the shares now poke above the 50-day moving average for the first time since January, which is a good sign. Obviously we could still fail from here, but it looks as though we're in a rising trend channel from February, top of that channel heading for 8 pence, and maybe we could see 8 pence by the end of next month while we hold above, let's say, 4.5 or 4.6 pence. The other positive is that we've broken above RSI 50, and this extended RSI uptrend line seems to be quite a significant and major feature, which is the reason I've included this as a potential turnaround up to 8 pence today. On to Jangada, which had a decent update today. I didn't know, I wasn't aware that they had a 10% or so stake in Blenco, which so you learn something new every day. Today we've had a gap through the 50-day moving average, 3.3 pence. We've also pushed back above the old February support around 3.3 pence. So it's a bear trap gap reversal. The March lows a bear trap, and above 3.3 pence we're looking for 4.3 or 4.4 pence at the top of that January broadening triangle. So that is looking quite interesting at the moment. Kinovo, not exactly the most followed stock all around, especially if I type in the right stock. Here you can see that the rising trend channel has been there since basically this time last year. We've had a little bounce or bear trap rebound from below that rising 50-day line, just like the other stock I mentioned earlier, and top of the channel there heading for 58 pence or 57, 58 pence, maybe by the end of next month. I suppose if you're cautious, you wait for a clearance of 45 pence. Which was basically the resistance on the way down, but with the rising 50 and 200-day lines, it looks like the 57 pence area should be on track by the end of next month. One of the stars of the day, and if not the year actually, has been Kodal. Beautiful progression basically since January. We had the vertical move there, golden cross soon after, and sideways consolidation above old resistance, so 0.35 doing the trick really in terms of support. We then broke the 0.45 area, but we're looking for 0.55 or 0.57 as a target at the top of that broadening triangle from June 2021. That's been hit. In fact, it's the stock has blown the doors off, and above 0.55 we're looking for as high as 0.8 pence by the end of next month. Shares obviously overbought at the moment, but while we remain above the 0.55 area, certainly looking for 0.8, perhaps even more than that, given what a great setup this has been over recent months. On to Mosman, which is doing well at the moment, edging up day by day. What's interesting here is that we now have the 50 and 200-day lines rising, so the next time they touch it should be a golden cross, so the run up to a golden cross, normally the strongest part in the cycle. I was looking for 0.11, which is basically that May resistance line projection. You could, if you are more ambitious, be looking for 0.13. That line also works though because of the October peak. So about 0.06, looking for as high as 0.13 over the next 4 to 6 weeks on Mosman. If you're cautious, maybe you want to see the shares just push through 0.085, as we've had a double top around that level today and yesterday. PetroTal is next. I think we can also upgrade the upside scenario. Here we've got, or we had, a November resistance line projection heading for the 50 pence area. Probably one now can say that we're looking at a July resistance line projection heading to 60 pence as soon as the end of next month, while we hold above 45 pence. Shanta, I think I looked at a day or two ago. Here we've got a nice breakout through the main resistance around 12.5, 13 pence. Above that, we're looking for that December 2021 resistance line projection as high as 18 pence by the end of next month. On to Tertiary, which I know has its very keen fans. Here we're playing a little game, bouncing along the 50-day moving average. That's now rising. Probably like to see the 200-day line rising. I think it already is, actually, but rising a bit more. If that's the case, then we should get our breakout through 0.18 over the next week or two, and then that would open up and move back to 0.32. Perhaps a bit disappointing that the shares haven't already flipped to the top of the range as they have done historically on that stock. Finishing off with one of my favourites, Zinnwald. I'm not quite sure why it's necessarily one of my favourites, but the chart here certainly an interesting one. We had that retreat and then the gap higher last month. Shares just about to break that February peak around 11.3 pence. Above that, it should be an easy 15 pence over the next 2 to 4 weeks. We've already had the golden cross there with the 50 and 200-day moving averages, and we've got an uptrend line in the RSI window, so everything going on quite nicely there. And one would imagine that the sellers were caught out by that rather vicious gap to the upside off the 200-day line, which is a bit of a handbrake turn for the price action. That's it from me today. More updates tomorrow.